For long phases of 2015, Japan's Topix index traded in lockstep with China's CSI 300, sometimes matching the action on Shanghai with only a few minutes delay. And for much of January this year, the Topix CSI 300 correlation became, in the words of one market strategist, perversely close. On a year-to-date global comparison, drawn by analysts last week, it turned out that Topix and Shanghai shares were 66% correlated. And critically, when it comes to international correlation between the CSI 300 and global markets, the Topix is near the top of the list, behind the Hang Seng of course, but ahead of Brent crude, the MSCI Emerging Market Index, and even the GSCI Commodity Index. So this week, with the Hong Kong and mainland Chinese markets closed for the New Year holiday, it was always going to be a fascinating control experiment on what Japan would do without distraction from the world's second biggest economy. In the event, Japan's dealing rooms sourced their dismay globally and panicked over the European bank sell-off. But having shown its markets can misbehave without China, the next question for Japan is whether, at the end of the week, it chooses to recouple with the neighbour or stick with its new source of risk-off triggers in Europe. Leo Lewis in Tokyo.